Welcome to Learning Fox. The stock market, a term that often evokes images of bustling trading floors and flashing computer screens, is essentially a marketplace where shares of publicly traded companies are bought and sold. Understanding how it works can seem daunting, but at its core, the stock market is built on a few fundamental principles that govern the buying and selling of stocks. To begin with, let's define what a stock is. A stock represents ownership in a company. When you purchase a share of stock, you are buying a small piece of that company. Companies issue stocks to raise capital for various purposes, such as expanding operations, developing new products, or paying off debt. When you invest in a company by buying its stock, you're essentially betting on its future success. If the company performs well, its stock price may increase, allowing you to sell your shares for a profit. Conversely, if the company struggles, the stock price may fall, resulting in a potential loss. Now, let's delve into how stocks are traded. The stock market operates through exchanges, such as the New York Stock Exchange or the Nasdaq. These exchanges provide a platform where buyers and sellers can come together to trade shares. When someone wants to sell a stock, they place an order on the exchange, and when a buyer is found, the transaction occurs. This process happens almost instantaneously, thanks to advanced technology that connects traders and facilitates trades. One of the key concepts to understand is supply and demand. The price of a stock is determined by how much buyers are willing to pay for it versus how much sellers are willing to accept. If more people want to buy a stock than sell it, the price will rise. Conversely, if there are more sellers than buyers, the price will fall. This dynamic creates a constantly fluctuating market, where prices can change rapidly based on news, earnings reports, and market sentiment. Investors often use various strategies to navigate the stock market. Some may choose to invest for the long term, buying stocks in companies they believe will grow over time. This approach, known as buy and hold, requires patience, as the market can be volatile in the short term. Others may engage in short-term trading, attempting to capitalize on price fluctuations by buying and selling stocks within days or even hours. This strategy requires a keen understanding of market trends and can be riskier, as it relies on timing the market effectively. Another important aspect of the stock market is diversification. This principle suggests that investors should spread their investments across various sectors and asset classes to mitigate risk. By holding a diverse portfolio, an investor can cushion against the poor performance of any single stock. For instance, if one sector is struggling, gains in another sector may help offset those losses. It's also essential to consider the role of market indices, such as the S&P 500 or the Dow Jones Industrial Average. These indices track the performance of a specific group of stocks and serve as a barometer for the overall health of the stock market. When you hear news reports about the market going up or down, they are often referencing these indices, which provide a snapshot of how a large segment of the market is performing. Finally, it's crucial to recognize the impact of external factors on the stock market. Economic indicators, such as unemployment rates, inflation, and interest rates, can significantly influence investor sentiment and stock prices. Additionally, geopolitical events and corporate news can trigger market reactions, leading to fluctuations in stock values. In conclusion, the stock market is a complex yet fascinating system that operates on the principles of ownership, supply and demand, and investor behavior. By understanding how stocks are traded, the importance of diversification, and the influence of external factors, you can navigate this dynamic marketplace with greater confidence. Whether you're a seasoned investor or just starting, the stock market offers opportunities for growth, learning, and engagement with the ever-evolving world of finance. Leave a like if you enjoyed the video, and let us know what our next video should be about.